Good afternoon, OSA community. This is Shamika, and we're back again with another Zoom session. And I'm excited about this topic. It's kind of new to me, but I thought it might be a benefit to the group. So we have Chaz Justice here with altLINE, the Southern Bank Company, and Andrew Simmons with Allianz. And they're going to do a presentation on invoice factoring solution to accelerate your cash flow and protect against facility bankruptcy. So if you have any questions, you can drop them in the comment section here, or you can definitely check out this video in a replay.
Great. Thanks, Shamika. Appreciate you having us on today for the NOSA group. Nice to meet anybody who's here and anybody who will see this later. My name is Chaz Justice. I'm with altLINE. We're the invoice factoring division of the Southern Bank. Other guy we have here that's going to be chatting with me a little bit is Andrew Simmons. He's with Allianz Trade, the trade credit insurance division of Allianz. And what I wanted to talk about today is altLINE powered by Allianz Trade. And so it's basically like Shamika said, it's an invoice factoring solution to help staffing companies accelerate cash flow. And then also we couple it with Allianz Trade Credit Insurance to help protect our staffing companies that we fund or finance against customer, nursing home, long-term care facility, senior living facility bankruptcy. And so that's what I'm going to talk about today. Just kind of moving along through these slides. First off, just wanted to kind of give a brief overview of what is altLINE powered by Allianz Trade. What are we trying to say here? So altLINE, we're a full service invoice factoring. altLINE powered by Allianz Trade is a full service invoice factoring and trade credit insurance platform. altLINE specifically, what are we? We are the invoice factoring division of the Southern Bank Company. We're actually an 86-year-old federally regulated bank. Most other factoring companies in this industry, our competitors, that sort of thing, are not actual banks. They're going to be independent non-bank factoring companies, independent financing companies. What we found is, they really don't have to adhere to any sort of standards or regulations, get their money from investors, other banks like us, and then have to lend to you at a higher rate. Whereas all of the money that we put together for our invoice factoring program to fund payroll for staffing companies, all that money comes from checking and savings accounts deposits at our local bank branches. We've got 4 or 5 brick and mortar branches in the North Alabama area. And so what that means for you guys is when we are putting together a payroll funding solution for you, we're going to be able to provide a better rate. We're not having to get money from investors, other banks, and then also just a more transparent process. We're fully regulated. We have to operate at a higher standard. I think what our customers like most about us is knowing what they're getting into, what you're signing up for. The worst thing that can happen is when you get with a partner in financing or that sort of thing. You think you're paying one thing, you get in there and you're paying, it's not. It just kind of puts you behind the 8 ball with what you're charging your customers and what your business forecasts and profitability is supposed to be. So we just really pride ourselves on transparency, knowing what you're getting into, and not only because we want to do that, we want to help people, but because we're regulated, we have to. And so that's what we are. We're altLINE. We do invoice factoring. What we've done is we've partnered with Allianz Trade, who Andrew is with, like I mentioned before. And what Allianz is they're the world's largest trade credit insurance provider. And they insure basically accounts receivable or invoice payments for our clients. And so kind of what that means, I'll kind of hit this again, is just, you're selling, you're staffing a nursing home. That nursing home doesn't pay you due to bankruptcy, financial difficulties, something of that nature. Allianz is going to cover that. So, you don't have to worry about not getting paid or getting in a debt with us as a factoring company. All your receivables can be insured. And we found it complements, our two businesses complement each other really well. And so we've partnered together to provide you guys with kind of a all-in-one solution here. And so that's what we're going to talk about a little bit today. As far as, why we're doing this, kind of the problems that we, or the reasons why we're here. First, just to talk a little bit about, why healthcare staffing companies really need payroll funding solutions or factoring solutions. I mean, as many of you guys already know, I don't have to tell you, I mean, staffing is a cash intensive business. It requires that you pay skilled employees who have high rates. Higher rates are causing you to have to put more money in the business to fund your payroll on an ongoing basis. And so that's one sort of part of the equation. You're having your biggest expense is payroll. You're having to constantly put your own money into it. And so that's just eating up all your cash. The other issue is, how long it takes customers to pay. I know that a lot of you guys already know this. So I'm just kind of probably repeating information that you've heard or already know in your own practice. But, with any sort of staffing, typically what you're going to be doing is billing your customers on net 30, 45, 60-day terms, but you've got your payroll due weekly or bi-weekly. And so there's that huge gap between when you bill and when you get paid. And, how are you going to pay your payroll? And we see, specifically when we look at the companies that we finance payroll for, generally in the staffing space, I would say, the days sales outstanding or, how long it takes our average staffing client to get paid on an invoice is going to be about 35 days. When we look at healthcare staffing, specifically, staffing companies that specialize in staffing nursing homes, assisted livings, that sort of thing, it actually, our days sales outstanding or how long it takes you to get paid averages out at about 49 days. So you can see that's considerably longer than a traditional staffing company, and maybe somebody staffing light industrial warehouses or IT or something of that nature. Healthcare, for a variety of reasons, just takes longer to pay. Just an example of kind of, what you guys might see in your daily life. If you just look like 5 LPNs at a, $31 an hour pay rate, let's tack on a 15% burden for taxes, insurance, that sort of thing. And then you say, oh, those invoices are going to take 49 days to pay. I mean, that's an instant $50,000 that you need in working capital to fund that payroll. Now, if you go to 10 LPNs, that's an instant 100,000 you need. If you go to 15, you can do the math, it starts to add up. And so, staffing, it requires a lot of cash to make it happen. And so, one quote we've heard is, securing the contracts is easy, finding good employees, especially in this market, is hard, and getting customers to pay on time, that can be a nightmare. So, so that's what we're here to trying to help with. So, that's more of the cash need portion, why we're here in the, as far as financing, accelerating cash flow, helping you guys with that. The next thing I want to talk about are where you're, going to get that cash. And so, really when you're a staffing company or, most, small to lower middle market businesses, you've got that are selling B2B, you've got two places to go. You can either come to a factoring company like us, or you can look at, traditional bank financing, traditional bank lines of credit or bank asset-based lines, that sort of thing. The problem with a traditional bank line of credit is, generally speaking, it's going to require multiple years of operating history, positive cash flow. You're going to have a lot of profitability showing that you can service the debt and then some. Predictability in terms of what your monthly revenue is going to be, need strong personal credit, ownership guarantees, strong net worth. They want to see that you have assets, real estate, land, buildings, all kinds of things that a normal staffing company just doesn't have. I mean, all you really need in staffing is your biggest asset is going to be your accounts receivable. So, it's tough. It's tough to find a bank, a traditional bank, that's going to finance a staffing company and really help you grow. I mean, you may get in situations where a bank will offer you 30 to 100,000, based on, your net worth, your personal guarantee, or whatever the case may be. And that's fine and all, but, what happens when you take on that, $150,000 contract, or, you really start blowing up? A normal bank is just going to want to see multiple years, not only in operating history, but multiple years of you operating on that contract to kind of make that happen. And so, we say at the top, bank capital, traditional bank capital it's there when you need it last. I mean, like I said, we are a bank, but we have an alternative form of bank capital that really gets the job done a lot better for staffing companies, especially startup, early stage, and in high growth situations. I'll just move on to the next one. We'll kind of get back into that. So that was the cash problem. Now I'd like to get to the second problem that Andrew here at Allianz, why we've partnered together to kind of give you both answers to your problems. And, within specifically the healthcare industry, you can see, it's the sector with the highest 1-year probability of default or bankruptcy, as rated by S&P Global Intelligence, as of December 2022. I mean, you can look here at this chart that they put out. Literally, healthcare has a higher propensity to bankruptcy or default than any of these other industries: communication, consumer discretionary, IT, even real estate, energy. This is what people are worried about. And, when you dig in a little further, senior living and long-term care facilities accounted for 54% of healthcare bankruptcies in 2022. So you're looking at, you're servicing, an industry or a sector that has the highest probability for bankruptcy. And within that sector, the majority of it is happening within senior living and long-term care facilities. So it's a great business to be in, but you just kind of, obviously, as most of you guys probably know, you got to watch out who you're selling to, because this is just the raw facts of what you're dealing with. There's some bad actors out there and people who don't know how to kind of manage what they're doing. And so why are nursing homes prone to bankruptcy? There's a few reasons. This probably doesn't cover everything, but, first off, it's a high cost business model to run a nursing home. You've got to staff people, 24 hours a day to kind of run these things. It's constantly needing staff. There's short staff situations happening. You've got rent, you've got, all these people, you've got, Medicare, all kinds of different expenses and regulations and red tape and licenses and things that you have to operate one of these things. And it's real easy, for somebody to kind of get involved in one of these nursing homes, take their eye off the ball when it comes to cost or whatever the case may be. And then the next thing you know, they're blowing up and they can't service, their debt. And next thing you know, they're filing bankruptcy and are not able to pay their vendors. And so, it's a high cost business model. Other reasons why nursing homes file bankruptcy, lawsuit judgment prevention. So within the nursing home industry, you're going to see a lot of, lawsuits, elder abuse, Medicare, Medicaid, insurance related fraud. Not that this happens everywhere, but, it happens more so than other industries and businesses. And so as a way of, alleviating some of those burdens, when you get a big, 5 class action lawsuits against you, the choice is to file bankruptcy, give a facility some breathing room, and in turn, they're not going to pay you when they're in bankruptcy. They're basically wiping all of that out, and you've staffed all these people, and all of a sudden they're saying, sorry, we filed bankruptcy, we can't pay you because of something totally unrelated. And this could be a good facility. We didn't see this coming. Everything was working fine, and then all of a sudden the lawsuit comes out of nowhere. So you got that sort of aspect. The third thing we see is that a lot of these, nursing homes and senior assisted living facilities are part of, a private equity backing, to where maybe a large investment firm or private equity firm has gotten into the nursing home industry. They purchase these nursing homes and individual LLCs as sort of subsidiaries of the investment firm or private equity firm. And then, when the nursing home isn't performing, it's not hitting their profit numbers, or they get into, one of those situations like a lawsuit or something like that the private equity fund doesn't have experience in. All of a sudden they're saying, this is not working for us anymore. We as a fund are going to bankrupt this subsidiary, wipe out all of our debts, wipe out all of our obligations to vendors and staffing companies like you guys. And it's going to only improve the position of our private equity fund or our investment firm. And we won't have to pay anybody. And guess what? It doesn't even affect our credit profile, because we've set these things up into individual LLCs. So it's not going to show negatively on our fund or our investment firm. So, those are just a few reasons kind of why we're seeing this happening. But the biggest kind of takeaway I think is, it's a great industry to service. There's a lot of opportunity, but there's a lot of risk that comes along with it. What we're hearing our customers say to us, when they're dealing with some of these feelings, especially after you've been running one of these for a while, how do I know, which customers are good, which customers are bad? I mean, you may know your local area, but then you start expanding into other areas, or maybe partner up with some vendor management, managed service providers, or vendor management systems, DNA and different sort of mega staffing companies that get you into different facilities. How do you know which ones are good and are bad? And that's tough. I mean, that's the type of thing that if you get with the wrong facility, it can crash your whole business. And that kind of leads into what happens if my customer goes bankrupt. What will happen to my business? What will happen to me? What happens if a payment gets delayed? What happens then? What if they're having some problem, but that my staff doesn't care if a payment gets delayed. They need their payroll. They need to feed their families and pay their bills and whatnot. One payment gets delayed. I mean, depends on how thin you're running, but it can really tank things, and all of a sudden your staff don't want to work for you anymore. So questions: do I need to slow my growth? Should I not take on this contract now where I can make a lot of money, because I'm worried I'm just running on razor thin edge of, if they pay 5 days late, I'm not going to meet payroll. Maybe I shouldn't take on this contract. Do I need to sell equity in my business, give up, everything I've built in order to fund my payroll? Like, does that make sense? If I'm unable to grow, should I even stay in staffing? These are all kind of questions, that can kind of come about with this type of business that you guys are in. And so, we're really here to kind of provide a solution, or a couple of solutions to these problems, what's keeping people up at night, and what you're kind of running into. So just getting back into specifically kind of what we do, what is invoice factoring? It's a form of financing that we provide here at altLINE that involves you selling your outstanding invoices to us in exchange for immediate cash to fund payroll. Just an example, I know a lot of you guys may already be doing this or have some experience, but, let's say you put one person to work for a week. At the end of the week, you bill your customer $1,000. That customer might have 30, 45, 60 days to pay you, but you've got payroll due the next week. We're going to fund 90% of that invoice. So we would send $900 to your operating account immediately. You could then use that to pay your payroll, pay any other operating expenses while you're waiting that 30, 45, 60 days to get paid. Now, when the invoice actually pays, instead of the customer sending that payment directly to you, they would send it to us here at the Southern Bank. As I mentioned before, altLINE is the factoring division of the Southern Bank. And so when we receive that payment, either check in the mail or ACH to our electronic instructions, at that point, we still owe you 10%. Or $100 in this $1,000 invoice example. So we then release that 10% or $100 back to you minus our fee. And you're able to do that for one invoice, 100 invoices. We have clients that fund probably as little as, 20, 30,000 a month, really start up all the way up to 4, 5, 6, 7, 8 million a month. So well equipped to help you guys at any sort of level that you're at. So that's what we do with the invoice factoring side of things. Where we bring in Allianz Trade and Andrew's services is for trade credit insurance. And so what that is, it's a form of insurance that covers any of your accounts receivable due against, unexpected commercial risks. For example, customer bankruptcy, credit issues, any sort of risk outside of, a dispute, basically. And Andrew can touch more on that. Is what this insurance is going to pay out in the event you don't get paid by your customer, for any sort of credit issues, any sort of customer bankruptcy. This is what the insurance is in place for. So what we're doing is providing a program that allows you to speed up your cash flow, pay your payroll, and also sleep at night, because you're knowing if that customer doesn't pay, you're not on the hook. The insurance company is. The benefits of using invoice factoring plus trade credit insurance within our partnership between Allianz and altLINE. Number one, you can pay yourself. You don't have to constantly have your own money invested in your business, and you're living on bread and water, because everything you have is and all your profits are going back into the business. So you can finally take some money out of the business yourself, since we're funding all your payroll. And then really where it gets into the benefits of working, this specific program where we work with Allianz, layering on the trade credit insurance, is it allows you to fund smaller customers, maybe customers that you normally would say, I want to take on this facility, but they're a one owner, location facility. Can I take them on? Number one, from a funding perspective, will a factoring company or will a funding company fund this sort of facility? And if they will they give me any real limits? Will they give me 5,000, 15, 20,000, or will they give me 100,000, like what I need on this facility to bill 100,000 a month? And so in saying that, with the trade credit insurance, Andrew and Allianz are going to look at each facility individually, and they're going to establish a credit limit that is generally, in my experience, going to be typically much higher than any factoring company not using a solution like this is able to provide. So we're able to do, small facilities that a normal factoring company might only give you 20, 30,000 a month on. We're able to give you 100, 150,000 sometimes, maybe more. So that's kind of nice to know that, really you can target any sort of customer. The second thing is going to be funding and credit protection for larger customer concentrations. Let's say, you've got 4 or 5 customers, you're billing 150, 200,000 a month. All of a sudden, one of your customers, loses one of their other vendors or other staffing companies, or you get a new customer and they say, oh, we need to do $250,000, $300,000 a month with you. Can you do it? A normal factoring company may look at this facility and say, we could give you 50, maybe 75, whatever. Well, we just can't get that large in a concentration. And so with the trade credit insurance, we're able to step in, just like I was saying on the smaller facilities. We can take an average, a medium-sized facility and do a whole lot more. We might be able to go 4, 5, 600,000 on a facility. So, that's the one piece of it, is being able to fund these facilities that you wouldn't normally do. The other piece of it is, if you're going to go 4, 5, 600,000 on a facility, and if that facility does go bankrupt, something happens, then you're done. Your whole company's under. And that's where Andrew comes in, to be able to say, you can take on this business and you don't have to worry about not getting paid. So, that's where we really see a lot of the value. We'll also provide you guys with in-depth credit research on any of your prospect customers that you're looking at. If you're eyeing a facility, you don't know if they're good or bad. And I can tell you, small facilities go bankrupt, multi-billion-dollar, the largest nursing home owner in the state of Florida filed for bankruptcy, one of the largest at least, a year or two ago. So it doesn't matter the size. And we will provide you that in-depth credit research on your prospect customers. Our research is great. We've got some proprietary credit databases, that sort of thing. Andrew, Allianz Trade, their research is probably the best. It's basically insider information, because what they're doing is they're collecting financials from privately held companies directly from their CFOs. This is not stuff that you guys are normally going to have access to. And they're using it to put together these insurance policies. And so when one of Andrew's customers doesn't get paid by one of these things they're insuring, the customer files a claim. Instantly, Andrew and Allianz Trade get that information. They relay that information to us. So we're looking at a facility, where you're saying, oh, I don't know if I want to do it or not. I talk to Andrew. We get with Andrew over at Allianz. He says, hey, Chaz, we just had a claim filed here a month ago, so I wouldn't recommend it. And we'll provide that information to you guys so you can make more informed decisions. And at the end of the day, I think all that comes back to peace of mind. Peace of mind, because number one, you can grow your business. You don't have to worry about funding your payroll. Number two, because when you do take on the business, you're not having to worry about not getting paid. And lastly, just allowing you to professionalize your business. Having a solid bank level, federally regulated bank level partner funding your payroll, I think gives you some gravitas if you're ever in a situation when you are trying to sell your business or something like that in the future. Having that in place is an added benefit. Another huge benefit to really separate yourself apart is having this Allianz Trade credit policy in place. For the same reason you like it, that's why, a buyer of your business or whatever the case may be might like it. So both of these things really help you guys professionalize your business, take things to the next level. That's about it from me as far as what we're doing here. If you need any more information, I know Shamika has our information. I've got our NOSA Group webpage here. We're always going to do our best to provide you guys with preferred pricing, preferred credit limits, all kinds of things, because you are part of the NOSA Group. So if you'd like to sign up and find a little more or get a quote, you can always go to this altline.sabenco.com/the-nosa-group/ or you can just give us a call at 205-947-3892. That's basically everything that I have. I just wanted to, really at this point, open it up to Andrew. If Andrew can tell you if I'm missing anything. Andrew, again, is with Allianz, or if I forgot anything. And then, after that, obviously, we'd like to take on as many questions as needed. So.
Yeah, no, Chaz, you did a great job covering the material. Just the biggest thing that I would say is the way our services complement one another is exceptional. So, we're able to really provide a service to you as the client, as well as to Chaz and his company on the back end with the financial analytics, the underwriting, the in-depth information that we're able to provide is really what makes this work and gives that protection, and peace of mind is probably the best thing you could have said, Chaz, because it is in fact a peace of mind. It allows you to know that, you can go out, you can place your nurses and your staff into these facilities knowing you're going to get paid and compensated on the back end. Whereas under normal factoring circumstances, the factor is going to look to you in the event of a default, a no pay, a slow pay, or a bankruptcy. altLINE, with partnership with us, knows that the claim can be filed, and they'll put that debt aside waiting on the claim payout, so that you're not having to have clawbacks, so to speak, or funds being pulled from your other facilities that you're staffing, so your business can continue to operate and function. So that's really huge. So we come alongside your credit department, we help you make informed decisions, and then at the end of the day, we're able to usually fund a lot higher, very similar to what Chaz stated, to give you that ability to really aggressively go after contracts and aggressively go after new business. So I think at the end of the day, it's a great platform, the combination of us two working together. And as Chaz said, if you got any questions for us, please let us know.
Perfect.
Okay, so if you do have some questions, you can let yourself off of mute. I think we may have something in the chat. One question that came in through the Facebook group was around, does it matter if you're working with a VMS or direct client as far as getting access to the trade credit insurance?
So I guess with that, that's going to be a situation where a lot of that, I think, and Andrew can kind of touch on this, a lot of VMSs that we work with in terms of the factoring, within their contracts, it will say, like, we'll pay you if we within 5 days of us getting paid. And so, if that sort of thing is in there, then Andrew, you can tell me, I guess, can you kind of speak to that, Andrew, as far as, those types of situations?
Yeah, so absolutely. So we endorse to that, right? So at the end of the day, we are familiar with those types of contractual situations and circumstances. So at the end of the day, when a claim is brought in, we explore all avenues to make sure we get paid, that you get paid rather. So we're going to pursue that on your behalf. If we have to pursue that versus the direct client, we can go either direction for that.
Right. And then I guess if you're billing an invoice to a VMS, and they, as long as the VMS is not paying you because of, bankruptcy, credit difficulties, issues, any other problem outside of a dispute, right, Andrew, then you guys would cover it. I know we're insuring some VMSs right now.
You got it. So slow pay, no pay. So slow pay is where they're paying you, it's just trickling payments along. No pay is where they're still actively in business, they're just choosing not to pay you. And then, of course, bankruptcy. We found 89% of all of our claims are normally slow pay, where they're putting you on a payment plan or they're negotiating something for you to work out, and then they just stop making those payments. Claim gets made on our behalf. We then collect for you or try to collect on your behalf. 60 days goes by. If no funds have been collected on our efforts, a claim check gets made straight to you.
That's great.
Okay, great. I think Amanda, do you have a question?
I do. Can you hear me?
Yes.
Okay, perfect. And sorry, I'm driving. Gentlemen, thank you so much for this presentation. It was well put together. So I personally been in the industry for 17 years, ran a pretty large factoring company that became one of the top 10 in the US. And it is interesting to have both of you presenting on this matter, because in 17 years that I've been in business, of course, we've run into our competitors who offer the non-recourse through credit insurance, like what you're offering through this partnership. The interesting thing, and I think the credit gentleman alluded to this, only about 89% or about 89%, if not higher, of the claims are going to be just due to slow payment. And so that is quite of that is just interesting, because in my career of 17 years in the factoring world, I have yet to run in just like maybe a handful of situations where specifically a facility has gone bankrupt because of all of those minor provisions that are just kind of hidden in there. Credit insurance can be extremely beneficial in particular situations, but it's not necessarily, in my opinion, and based on 17 years of experience working with thousands of companies, it's only going to come handy in specific situations. So, for example, primarily, the majority of concentrations, when you do have those major concentrations, which in the past with clients that are growing rapidly and they are having high concentrations, that's going to be my number one thing through my partnership with Euler Credit. But it's not typically, and especially in healthcare, in my experience, and we specialize in healthcare, it's not necessarily because of bankruptcies, typically because there's a dispute or there's slow payments or some of the other things that the gentleman, the credit insurance guy, alluded to.
Mm-hmm. Yeah, I think we've seen it all, you know. We've seen bankruptcy, we've seen slow pay. I think another huge thing about what Andrew does is he's giving us sort of inside information as far as credit deterioration on clients. So if you're servicing a nursing home or something of that nature, and all of a sudden he's seeing claims getting filed, that sort of thing, we can alert you and let you know, hey guys, stop servicing, wind this thing down before it ever gets to bankruptcy, before you ever have to file a claim. So, I know we've had a couple that have filed bankruptcy and been paid out. I think we've had some protracted defaults and sort of things like we're just, not going to pay for whatever reason. So Andrew, I mean, you've probably seen it all, I would imagine, but.
I think Andrew may have gotten frozen.
Bad connection.
Yeah.
He has good light, but bad connection.
Does James, do you have any? Okay. James, did you have any questions?
Yeah, I think the big differentiator. Yeah. So you indicated your usership with Chaz, it's all recourse. And so we're the value there. You hear me now? Is that better?
We're still kind of
breaking up a little bit, Andrew. Okay.
All right. Is that better?
Yeah, that's better.
Okay, perfect. So what I was alluding to, I guess the comment was made about non-recourse factoring. So the unique thing with Chaz and I in our relationship is that they do recourse factoring. And so the policyholder would be the staffing company. They would own the policy. And so we're going to be working on behalf of the staffing company in partnership with altLINE. So it's a little different. And so we're able to, as Chaz stated, give that information not only to the policyholder, which will be the staffing company, but also directly back to Chaz, who's funding. And so we work in conjunction, the three of us, and it really makes a good partnership. And so it is interesting. Obviously, bankruptcy is is more, I guess, happening more often. But again, the largest amount of claims that we see is usually from slow pay. And the good news is that we're a lot of times able to collect on that debt and ramp it up. And at the end of the day, we're not trying to handcuff our policyholders. We want them to maintain their relationships and continue to do business with them. But if they get to a point where they just have to draw a line in the sand, so to speak, and the bank's not getting the funding back, and then the client is having to stop staffing and putting people in place, the claim gets filed and we make good on it. So that's the great news on that.
Yeah. And I'd say also, the other unique thing in what Amanda was talking about is non-recourse factoring. And so what that is when a factoring company kind of buys a trade credit insurance company policy in the background to cover its clients. And so what we typically see in those situations is when a factoring company does that, what they're doing is they're marking up the price of the credit insurance. So you're not only paying for the credit insurance, you're paying for the lender markup, and also you're not in control of the policy. So, the factor could miss a payment or something, and all of a sudden, you're not insured and you're not in control of the policy. So you're paying higher fees, and you're not in control of the policy. The other thing I'll say also, and Andrew kind of speak to this, when a non-recourse factor gets, one of these kind of where the factoring company buys the policy and they're in control and that sort of thing. Usually Allianz, in our experience, when we're bringing new clients, new staffing companies to them all the time, they're able to do things a little different for new clients. When you have a new client, you're able to give limits that you're not able to give an existing factoring company. Limits are reserved for new clients. And we're basically, and we have I'll tell you guys this, we have zero financial relationship with Allianz. They don't pay us a referral fee. They don't do anything. We really just do this to help our clients and help us feel secure also. But so we're constantly bringing, new clients. And so a lot of times credit availability, insurance availability, there's certain amounts of coverage for a given customer, and we'll have preference on that coverage over a non-recourse factor, that may be locked into a certain limit. Is that kind of accurate, Andrew? Yeah. Might be broken up a little bit.
Yes, absolutely. Absolutely, it is. So when you work with us in conjunction with Chaz, you're going to get that preferential access.
Yep. All right.
Yes, absolutely. Were you able to hear that? Okay.
Got most of it. Yep.
Okay. Anyone else have any questions? I didn't get any more questions in the group.
Okay. Well,
Great.
good.
Well, Shamika, thank you so much for allowing us to come in today and share with you.
Thank you guys. Thanks for joining. Hey, Andrew, can you drop your contact information? I wasn't able to locate it in the chat box.
Yeah, sure. No problem.
All right. So if you didn't get a chance, okay. All right. And if you get a chance to join us, you can feel free to drop your comments below, and there's contact information there if you want to reach out to them directly to get answers to any questions or find out more information.
Great. Well, thanks so much, guys. Hope everybody has a nice evening, and just let us know if we can help.
Thank you. Thanks again.
Thank you.
Have a good one.
Bye.